90% of indicators are absolutely useless. They're either delayed or they don't work at all. What you need to understand is that majority of indicators, the way they work is based off of self-fulfilled hypothesis. What are self-fulfilled hypotheses? These are basically hypotheses that cause people to, these are basically outcomes that are based on people believing the outcome will become a reality. Meaning, everybody thinks Bitcoin is going to go up. People press the buy button, they buy Bitcoin. Now Bitcoin is up. Now everybody was right about Bitcoin going up. So what you need to understand is what are the main indicators that other people are actually paying attention to and is leading to them pressing the buy button and pressing the sell button and their decision making process for us to be able to use. And I'm going to be talking about why the most rare indicator on your chart is actually 100% useless, and I'm going to be telling you exactly how many indicators do you need to have on your chart in order to become a profitable trader. Now, the reality is there is 1,001 ways to become a profitable day trader. Okay, there is 1,001 ways to become a profitable day trader, right? And what I'm talking about in today's video is just something that's worked for me. Okay, so take it with a grain of salt. And if you're someone who has freaking 50,000 indicators on their chart, well, kudos to you, as long as you're making money, right? That's all that matters. So without further ado, let's get into it. What is the number one indicator? Like I said earlier, right? The reason why the good indicators that work is because people are paying attention to them and they're making their buy and sell decision based off of them. So for example, let's talk about the volume weighted average price. Now, that's not going to be my number one indicator. However, that indicator is one that I do actually, it does have my respect. So the volume weighted average price, or the VWAP, is the most common used indicator in the stock market, right? And it's the one that, you know, everyone really has on their chart. And people know that the break of VWAP can be used as a bullish uptrend indicator, and the break of VWAP to the downside can be used as a bearish downwards indicator. So a lot of people actually base their stop losses and entries and exits based off of the VWAP. Therefore, you have a bunch of buy orders and sell orders piled up around this VWAP, causing stocks to be more volatile when it gets closer to the VWAP, right? And I think that this is what you need to understand when it comes to using indicators that are extremely, extremely rare, right? And I think that with the rise of TradingView, right? TradingView has turned, you know, people into freaking maniacs where they think that it's some secret indicator that they're missing out on, right? Oh my god, this indicator has the VWAP and the MACD and the RSI and the freaking Bollinger Bands, and they're all together, and it's gonna make a big pot and it's gonna tell me when to get in and when to get out. It doesn't work like that. It doesn't work like that. Okay, like I said earlier, stocks go up because people press buy, stocks go down because people press sell. If I'm looking at the VWAP, which me and 60% of other traders are paying attention to, and we're making our decision based off of it, based off of the VWAP, and you're looking at the freaking STAT, that is a freaking, let's just say that is the newest indicator that Jimmy came up with on freaking TradingView, right? Because if you don't know, TradingView basically allows you to make your own indicator and stuff like that, right? So we got the VWAP with 60% of traders paying attention to it, and then the STAT, where you got the freaking Jimmy and his cousins plus you, which is let's say it's 200,000 people. Okay, 200,000 people paying attention to this indicator versus 60% of traders, which is millions and millions and millions of people. Now, the VWAP is telling me that there is a strong support level at $3.50. Okay, that's where the VWAP is showing me. That's where the support is. The VWAP is showing the support is at $3.50 to me, and 60% of other traders all around the world. On the other hand, the STAT, which is the VWAP, the MACD, the freaking the 30-day moving average, and the freaking Jimmy's secret recipe salt mixed in together, the STAT is showing you that there is a strong support level at $3.20. So the STAT shows 320, the VWAP shows 350. Where do you think people are going to press the buy button and buy the dip? Where is the majority of buy the dip orders and limit buy orders piled up? At 350, where everyone else in the world is paying attention to and they have their eyes on 350, or freaking 320, where you and your cousins got the STAT going? Where do you think? Which one do you think it is? probably the VWAP, right? So what we want to base our indicator use is going to be what is actually the most commonly used indicator and what are people actually making their decision based off of, so we can anticipate this decision and make correct decisions based off of what they're going to do next. Okay, so for that reason, the number one indicator is going to be none other than, drumroll please, is going to be price action. It's going to be the naked chart. It is going to be the chart that you look at without any wiggly lines on it. That's the thing that everyone in the world is looking at. 100% of traders are looking at that. Not everyone has the same combination of freaking wiggly lines indicators on their chart, but every single person is looking at the same naked chart. And your best friend as a trader, as a technical trader, I've been doing this shit for a very, very long time, my friends. I will show you my trading journal, which I started out with when I first started trading, and I'll show you that, you know, I've been writing notes on technical analysis for years now, right? I mean, this is years of freaking just writing and oh this and oh that, and oh this indicator does this and that indicator does that and that indicator does, only to find out how useless all. Look, there's literally the MACD. I literally have the MACD. Look at this. Use MACD and RSI together. Star. This is hilarious shit, right? This is crazy. And then I have all these freaking candlestick patterns and everything. It keeps going. Okay. So I'm telling you, I've used it all. They're useless. Okay? They're useless. Keep your chart clean. There's a saying, it goes, the horizontal line is a trader's best friend, and it couldn't be more true. Okay? It couldn't be more true. And I think that even when you look at trend lines, even when you look at this, even when you look at that, it's all really a variation of the horizontal line. Like the horizontal line will show you the exact same thing that the trend line is showing you, right? But instead of two trend lines, you got 1, 2, 3. You have different levels on a chart to pay attention to, right? So for me, price action is king, and also the VWAP, right? And I'll obviously use volume, right, as an indicator of, okay, well, we got an increase of volume over here, or we got a decrease of volume over here. Now, I am going to be making a complete guide, a 3-hour guide for everyone in the Telegram group. It's going to be a 3-hour breakdown of every single thing that I know when it comes to trading and is applicable to you guys. So hit that comment section below. There's going to be a Telegram link. It's free, okay? You broke people that think everything that people sell is a scam. It's literally free. It's free 99. It costs nothing, okay? So there you go. Okay, I got you. Free. I give free. You be happy. Okay, hit the like button. Okay, and that's it. Now let's talk about one more thing. Let's talk about how many indicators should you have on your chart, because I think that this is a discussion that we need to have right now. You should not have more than 2 or 3 indicators on your chart. If you have anything more than 4 indicators on your chart, the probabilities of you losing money actually increase. Now, you guys may be like, but Sam, I watched this YouTuber and he has 15 indicators, and I watched this YouTuber and he has 16 indicators. I will tell you why these people do this bullshit. I will tell you why YouTubers have so many lines on their chart and why it is absolutely useless and why you should not do the same thing as them. They do it, okay, in order to make you think they know more than you. That's their way of going ahead and saying, you see, I know all these names of indicators and you don't. Therefore, I am superior to you. Therefore, pay me money. Therefore, listen to what I'm saying and do as I say. I have seen this happen over and over and over and over again. But let me tell you why this is absolute BS. Let's say you have 4 indicators on your chart, okay? 4 fucking wiggly lines, okay? You got the 30-day moving average, the 5-day moving average, you got the VWAP, of course you got the VWAP, and you got the Bollinger Bands, okay? That ends up being 4 indicators, right? Now, what are the odds? Tell me this, riddle me this, okay? What are the odds that all these 4 indicators on a given specific trade are going to indicate for you to buy? Very low, very low. So what happens? One day you trade this indicator with that indicator. One day you ignore these 3 indicators and you listen to this indicator. One day you use this pair and forget about that pair. One day you use these 3 and forget about that one. All of a sudden, you don't have a strategy. You have a freaking combination code strategy, which is like there's 1,000 different ways of making this work. Like, what am I even doing? So for that reason, you need to figure out the right combination that works for you. A small combination. Make it be a freaking two combination passcode. That's why I like not having more than 2 indicators on my chart. Okay? And from there, use that as a guideline, as a map for your entries and exits. Alongside price action. Price action being the main thing that you need to focus on. If you don't still know how to draw your support and resistance, that's what you need to focus on. Everything in the stock market, in trading, in Forex, in crypto is based off of support and resistance. You master support and resistance, you're 50% way towards profitability. Your exits are going to be defined by support and resistance. Your stop loss is going to be support and resistance. Your entries are going to be support and resistance. Every single thing is going to be based off of a variation of support and resistance. That's it. I got you. Okay? With that said, I love you. I wish you guys the best of luck. Whether it's in trading or everyday life, hit that thumbs up button. Send this to a video to someone else that you want to see succeed and become a profitable trader. With that said, your boy Sam from Top Trade Academy.